All right, what's up, Tycoon? Super excited for today's video. We're going to be breaking down Workhorse again, and we're going to be looking at one of my favorite charts of all time. It is this one right here, okay? The psychology of a market cycle, okay? You've got your disbelief, your hope, your optimism, belief, thrill, euphoria, okay? That's your highs, euphoria highs, complacency. This is where you're saying, oh, we just need to cool off for the next rally, right? That's just complacency in the market. Then anxiety as things fall even lower. Why am I getting margin calls? This dip is taking longer than expected. You have denial, panic, capitulation. You have anger, ultimately leading into depression. My retirement money is lost. How can we pay for all this new stuff? I am an idiot. Okay. This is how a lot of people are feeling globally. Okay. And especially in the US, with the recent stock market crash. And overall, the S&P 500 and NASDAQ have officially hit bear market status. So, it's official. All right. We are in a bear market, and, we're somewhere in between capitulation, anger, and depression. Okay. There was a lot of anger originally who shorted the market. And, now we kind of are in the phase where, we have the excuse, right? We have, the reason for the drop for everything, right? It's the high inflation, the runaway inflation, the supply chain shortages, the Ukraine crisis with Russia. Okay. You have gas prices, energy prices skyrocketing. You have the 10-year treasury yield. You have so much, right, going on where we're starting to understand the upcoming recession that the U.S. stock market is facing. Right, this is very evident in our workhorse chart. Okay, and I broke this down last time. Here's our disbelief. Okay, is our initial disbelief when we're trading at these lows down here. Then we have our hope, optimism, belief, thrill, euphoria. Here's our complacency, anxiety, denial, panic, anger. Okay, and in the last video, I said that this was a potential bottom. Okay. We can't predict the future. That was all the way back in, around like January, February, that I was doing that. And obviously, market conditions have scaled a lot more and gotten a lot worse, right? Nobody was able to see that future. But what we did do, okay, correctly, is we came in here and charted some major support and resistance levels that are very important to the chart, right? And the reason they're important is because these are the areas where we came out of our last depression rally, okay, into our disbelief rally. All right, so we'll go back into the chart and we'll look at these again, and we can see that this is where our disbelief, our anger, and depression, where we're just trading down at all of these levels. Okay, here's our initial disbelief rally from $1.32 up to $3.33. There, people are like, wow, this thing went up 100%. No way, right? It pulls back a little bit, and we get this huge rally, these breakouts with hope and optimism. Okay, and again, we go from the belief to the thrill, and then the bad stuff happens. Okay, we hit the euphoria highs around 43, and we come all the way down, but we've been prepared for this, right? We said this was a possible bottom in this area, and we've been really stuck in this area. Okay, we have not come all the way down to $1.24, but we are bouncing and consolidating and doing what's known as box consolidation. Okay, so what I'm going to do, because this is a great stock term for you guys to get prepared for, start to learn yourself, is this is going to be our box consolidation right here. Okay, so we have our major support and resistance levels that we see, we're trading within, right? It's the $1.24, 333, and 506. But currently, this is our box of consolidation. So until we break out of this box to the upside, right, or to the downside, we're really just going to be ranging in between this area. Okay, now overall, much bigger picture, we know that since the stock market is in a bottom, okay, we know that we're somewhere in between anger and depression on the chart. What we can do is position ourselves for the long term. Okay, so we can say, all right, well, I want to buy down here below $3.33, and I'm going to dollar cost average in those positions, because I know that the next time we have a bull rally, okay, then the market will drive this back up into euphoria highs where you can take profit at. Now, the only thing you have to fear, because this is not financial advice, is you have to actually do some research on these companies. Okay, like Workhorse, for instance, it was trading very, very high on rumors of a deal. That deal did not happen, and the stock got obliterated. Okay, so it really depends on what companies you're looking at, especially to really understand whether you're making some sound long-term investments, right? But what we are doing is breaking it down using technical analysis and looking at the psychology of a market cycle. And we're seeing that, we're in this anger and depression phase. We don't know when it's going to end, You know, so there's nothing telling us that, you know, where the market is going to reverse and this thing is going to go in an uptrend. So it's all about determining what prices you want to buy at, what prices you see value at. There is something a little bit hopeful. Okay, we do have some very nice bullish divergence. Okay, and if we zoom in a little bit more, I'll go ahead and explain that to you. And this is somewhere where you can look for a swing trade entry. Okay, and what I mean by that is that we have an idea a little bit of when we possibly could be getting the next bounce in the market. Okay. So, you know, this was all of our possible, you know, disbelief rally. Like if we were to go into a disbelief rally, these are the price levels that we're going to be looking for. But that will not come until our next market cycle, bull market cycle. Okay. So again, we're in the depression and anger phase right now. The main thing I want to highlight to you all, okay, is going to be here. All right. And we'll draw a nice little circle on them. Let me take this box out of the way so you can see. All right, we have our box here, or our circle here. We have our circle here. Okay, what I want you to notice is that we're going lower. We're making lower lows. So what we can do is draw a trend line as well from here to here. All right, and this is our downtrend line of support. So we can see that, you know, we're coming here once, twice, 3 times, and we've bounced at this area as support. So we know that this is a potential support line for us. And we look at our RSI and look what we're doing here. While the price action on the stock chart is actually going lower, creating lower lows, it's actually coming higher on the relative strength index, meaning the relative strength is increasing as the price is going lower. And this is a potential signal that you may see bullish activity in the near term future. And what do you know? We do have a very nice rally off of that bullish divergence. And we can take a look at the gains here. And from one day, about 20 days, a 53% rally on Workhorse. Okay, so what you can do is you can look and see, all right, well, next time we come down and create a lower low along this support trend line, I can come and look for a possible entry here and have my stop loss either below this trend line or at, you know, whatever I determine with my own risk tolerance, right? So you look for a bounce off of this support line and you look for a bounce off of the bullish divergence trend line, because, you know, when we're popping off of the bullish divergence, you know, we tend to get a rally off of there. Okay, so there's your swing trade setups. Again, no financial advice, and I broke it down long term for you guys as well. So all I ask in return is you leave a like, subscribe, and comment below the next stock you want to see in my next video. Okay, I do those viewer requests every single week. So, you know, stay on the lookout for those. Okay.